Good afternoon, traders and investors. Will back here with another one, coming to you with a Sunday video, guys. And it's that time of the week again where we go over the top 5 options plays for the upcoming week. Hopefully you guys are having a very nice weekend so far. Now, in today's video, keep in mind that all of the options plays are going to be for selling options, more specifically for selling put options as part of the larger wheel strategy that we like to run on the channel. In today's video, we're going to do a few key things together. Number one, go over the expectations for the week. Where do we stand in terms of the technicals? How are the indexes shaping up leading into this week's price action? Do we have also anything to look out for in terms of earnings? Do we also have anything to look out for in terms of macroeconomic releases that could sway the direction of the markets throughout the week? So that's going to be aspect number one. Aspect number two of today's video, we're going to go over a few of the strategy rules. Just a quick refresher because you guys know it's a very consistent strategy in terms of the way that I run it to sell puts under the market on our favorite stocks, but you always need to remember the rules, which will give you the best consistency and the best win rate as well. And thereafter, after we're done the rule recap, we are going to look into, of course, the top 5 options plays of the week. And as per usual, I have about 10 bonus plays for you, so make sure you stick around to the end to get all those bonus plays as well. Without further ado, should be a very fun video. Let's jump right into it, shall we? So in terms of the expectations for the week, well, we know that it's been a very bumpy and a very volatile earnings season, but for the most part, all of the earnings have been good. Take a look here at data compiled by FactSet as of last week. 90% of all S&P 500 companies have reported earnings so far. And although the price action on some companies was questionable, talking about companies reporting very good numbers, but they were seeing their stock prices go down after their earnings releases, how did the companies do? This is the scorecard right here, with 90% of all companies having reported so far. 81% of those companies reported a positive EPS surprise, and 81% of those companies as well reported a positive revenue surprise. Those are both above their 5-year averages, so the fundamental aspects of all these businesses are quite good, even though sometimes we had some awkward price action following those earnings releases. Now, something else that I did want to show you guys is buried a bit down here. Sorry about that. Let me just jump into it. We have an 87% decline in the amount of companies citing the word recession on earnings calls. The word recession was only mentioned 16 times from all the companies that reported so far. The 5-year average of the number of companies saying the word recession is 74, and the 10-year average is 61. So we came in well below the average. So apparently companies are feeling a lot better in Q2 after this most recent earnings, a lot better into the end of the year, at least as they were in comparison to Q1 when we had the whole tariff situation unwinding overall. So in terms of the earnings scorecard, it was pretty good. And I'm happy to say, guys, we are through the bulk of earnings. The last 4 weeks were a very volatile time in the markets because of all the earnings, but now we're winding down. You can see this week, the week of ending on August 14th, should be a pretty muted week, all things considered, in terms of the earnings releases that we have on the table. So earnings are probably not going to be a deciding factor in terms of the price action this week. What will, however, be a determining factor is the release of CPI, which comes in Tuesday morning. Now, I'll remind you, coming into this report, we are expecting a 2.8% year-over-year increase in CPI. That is above last month's release of 2.7% and would effectively be the 3rd consecutive month in a row where inflation is on a bit of an upswing. Now, as an absolute number, 2.8% is not that bad. We are still well off the highs that we had back in 2022. And we are still overall in a downtrend, although it has been bumpy over the course of the last 6 months. There is a narrative at play, however, right now, and that is the narrative that tariffs will lead to inflation. So, of course, if the CPI release comes in a little bit hotter than expectations, at 2.8, that could be a day in which the markets interpret that on a negative in a negative fashion and send us into a bit of consolidation. It's been a very nice rally since the lows of the non-farm payrolls jobs report, but we know that the narrative right now, at least for the media, is there's a lot of uncertainty surrounding the economy, surrounding the jobs market, surrounding whether or not tariffs are going to cause inflation or not. So, of course, any one of these news releases that come out and paints a negative picture for the markets temporarily, that will be a catalyst in which you can see a bit of volatility, especially to the downside. So if I had to pick one day throughout this week that could lead us into a little bit of a red day overall for the markets, it would definitely be Tuesday. This data comes out early in the morning. However, I do really think that since the bulls are in control of the higher timeframes, since we also got very positive earnings from the market too, The long-term fundamentals of the market should be able to support any negative short-term price action. Essentially, what I'm saying is, if we have a nice red day on Tuesday, it could be a fantastic buying opportunity. And the way that I enjoy taking advantage of these buying opportunities is by selling puts under the market, especially on a day where the volatility might be higher and the prices move a lot lower. It would be a fantastic opportunity to maybe get some trades in on many of the stocks that I'm about to present to you in the top 5 options list for today. In terms of the technicals, guys, well, the bulls had a very nice engulfing move on the SPY, a lot of space above the lows, right? Anything above 618, just looking for a higher low on a dip for possible further trend continuation. And even if we consolidate a little bit more here, guys, it's important to remember who controls the higher time frames. It is still definitely your bulls. We are still in a very nice weekly uptrend, and any consolidation lower is just looking for a weekly higher low. Very healthy consolidation. As a result, I will be a dip buyer of that consolidation. The QQQs are actually looking a bit better. They have put in a brand new all-time high. So suffice to say, in the event we unwind some of this bullish price action from the last week, we additionally will just be looking for some support below, and we got a lot of it. Prior resistance from prior all-time highs will be current support, and as a result, I will be a big fan of buying any and all dips throughout the week, but I will be using short put options to do that. On nice red days, we can find some opportunities well below the current market prices and set us up very well into the future. As well, you guys might understand that we are heading into a period where seasonality is somewhat questionable. At least it has been over the past 20 years. It doesn't mean that every single fall season needs to be choppy and needs to be net down. However, on average, more fall seasons than not have been choppy and or down. It doesn't mean that every single August and every single September has to be down, but the probability, the skew of the probabilities is for more of that action. But once again, it doesn't mean that it's going to happen. One thing that is for sure, though, is Q4, talking about the end of October into December, can represent a very bullish seasonal period in the markets. As a result, if we are buying dips and selling some put options into the fall season, I do believe that those, if ever we're assigned, those will be able to come around coming out of the fall season. I'm not saying we're going to be stuck in positions for a couple of months here. I'm just saying that it is an environment where we can be buying the dip and relying on positive earnings that we've received so far to carry us higher all throughout the remainder of the year. And as a result, I'm not nervous or I'm not concerned selling any put options into the market right now. If anything, what I do want to be targeting, guys, is companies that, for the most part in the last month, have been left a little bit behind. You can see the heat map right here. This is the last 1 month of performance. A lot of nice gains from a few semiconductor companies, but not all. A lot of gains from some of the Mag 7 names, but look at software. Software not performing too well. Cybersecurity in the past couple of weeks is down like 15-20%. A lot of the financials are down, a lot of the healthcare names are down, and the bottom half of the market, you can find some pretty good deals. So what I will be focusing on, especially throughout this month of August, is not necessarily chasing the names that have put in the most amount of gains. It'll be really focusing my attention on names that have been unfavorable for the past month, month and a half, as the markets have been pushing higher, because usually if we do get any market declines, a lot of these names have already put in their declines, and the declines may be a bit less than some of the names that have already ran a lot. So the last thing you want to do if market consolidation is what you're nervous about is sell put options on companies that have ran a ton, get trapped at the top, and then unfortunately, just not have a very manageable level at which you're in the stock. What you do want to do, though, is target companies that have sold off a little bit, still having very solid business models and that still had very solid earnings, but that might be coming into a big area of support and a better valuation overall. So I'm not going to chase the names that had the most green. No, I will play some of the names that have been a little bit left behind, but that did report very good earnings overall. So that concludes pretty much today's pre-market prep in terms of the expectations for the week. Hopefully you enjoyed that. Now, in terms of the strategy rules, so here are the strategy rules, guys. I won't be going over every single one of these rules individually. For that, I will link a video down below in the description of today's video. Please, if you're not familiar with these rules, definitely go watch that video. It's only about a 10-minute segment, right, where I go through every single one of these rules individually Every single one of them is very important, especially if you want to have a lot of consistency and a very high win rate. Do not forget any of these rules when you're selling puts into the open market. If you are respecting most of these rules, you should have a pretty decent time in terms of identifying high quality companies at very decent levels of price action that you can form some trades in. So take a look down below in the video description, guys. It's about 10 minutes. Just give yourself a refresher on these rules. But for now, we'll kind of be jumping over them. Take a screenshot if you want, just to save some time in the video to be more favorable for the YouTube algorithm. So wishing you guys all the best of luck this week, but luck will definitely be on your side. Well, not luck, but the probabilities of success will definitely be on your side in the event that you are respecting all of these rules, letting the market come to you, and being patient and waiting for your levels to free up. So those are the strategy rules. Take a screenshot once again. Now let's dive directly into the top 5 options plays for the week, shall we? All right, so company number 1 on the list is going to be one that you guys are very familiar with. It is going to be Uber. So Uber had their earnings last week. We recapped them on the channel. Very, very strong earnings, but the market just did not react as such. They're in a little bit of a dip right now. What I do want to take advantage of is this dip, of course, and we have a very nice support level below us, talking about the whole 84 down to about 77 region. So in the event that Uber has a bit of a decline on Monday or maybe Tuesday after CPI, I definitely want to be taking advantage of that dip, and I will be selling some put options, preferably at the lower end of this range. The expected move for this week is 86.71. And if you guys don't know where to find the expected move, just keep in mind this website right here, barchart.com. Just type it into Google. Just Google bar chart. Google expected move, or bar chart NVIDIA expected move, or bar chart Uber expected move. You'll come to this page right here. Pay attention to the lower end of the price. That is going to give you the best amount of the best probabilities of not being assigned. You always want to be writing puts below the expected move for the week. So that being said, we know that we should be targeting 84 or probably under. The expected move is 86.71. Let's go see on the options chain, what do we have here in terms of some short puts on Uber, and where could we possibly play? Well, let's take a look, right? We want to be below roughly 86. You'll see that we'll be looking for the 0.5% rule, if you remember these strategy rules. 0.5% is your ROI. It's your take-home pay for the week. How do you derive the 0.5% rule? Just by looking at the options chain? It's very easy, guys. Just divide the strike price in your head by 2. So 86 divided by 2 is 43. That is where the 0.5% rule is going to be on the options chain. If you go too close, the premiums are enticing and alluring, but you will get trapped in several assignments. So please don't do that. Don't be too greedy on your strikes. If you go too low, the ROI is just not good enough. 0.5% is really the sweet spot to where there's a low risk of assignment, but you're still making a decent amount of money per week. So at a first glance, we have some strikes here at 86, which would represent the 0.5% rule. That is indeed below the expected move, but I want a little bit lower. So all I need is one or a couple red days of follow through, maybe Monday if Monday's a red day, or Tuesday after CPI if Uber makes its way down into the 87, 86 range. Maybe that frees up the 84. So for this week, even though we can't see premium on there now, I want you guys to prepare this one if you're interested. Take a look at the 84s. If we can find 40-something cents at 84 strikes or better, I definitely will be taking that position. Fantastic company, fantastic earnings, and overall the company is trading at a pretty decent valuation right now. At least it is at 89. At 84, it gets even more attractive, and I definitely would not mind being assigned some shares of Uber close into this very juicy area of support. That's company number 1. Company number 2 is going to be also another company that you guys know very well. It is going to be PayPal. PayPal also came in with their earnings, and we covered it on the channel. Their earnings were very good. However, the market did not react as such. And as a result, since their earnings release, we've come down a lot. Take a look at this. We're at a decline right now of almost 15% from the pre-earnings highs. And additionally, we are into a very long-standing area of support. Sorry, let me stop moving the chart around so much. The area of support is 67 down to 58. It's been a very long-standing area. For the past 2-3 years, the market has been finding a local bottom here. The valuation of PayPal right now in the high 60s is extremely manageable, dare I say, relatively cheap. And as a result, I do want to be playing this pullback. And additionally, we're getting very close, guys, to oversold conditions. Another little day, we'll probably do it for PayPal, but I like this area overall. And as a result, I will be playing. The expected move for the week is 65.84. Let's go shopping on the options chain and see where can we find possible premium here below the expected move of 65.84. Let's call it 66, right? So as you can see right here, here, if we're looking for the 0.5% rule, half of the mid-60s range is roughly about 30 something cents. So that's where we want to be. You can see here at 66, we are getting some good premium of 40 cents, but I want to be below that. That's slightly above the expected move. As a result, if PayPal has 1 or 2 more days of decline, maybe we can find some premiums down here, 65 and 64. The goal is to be getting as deep as possible into this support area to make sure that you're getting the best possible price. So in the event that you see a couple red days to start off the week, and we can fire off some 65, 64 strikes, which are all very deep within the confines of this very large support area, and the valuation of the company is quite good, we know that we're getting a pretty good deal on PayPal. So those are the ranges that I will be playing, 65, 64, 63, as low as I can possibly get in this range while still getting my 0.5% for the week in terms of ROI. That's company number 2. Company number 3 is going to be another company that you guys know very well, and it's going to be Chipotle. So Chipotle had earnings just about a couple of weeks ago, and we did cover it on the channel as well. Unfortunately for them, same-store sales growth was quite abysmal, right? Down and down and down, and as a result, since their earnings, the company has fallen off a cliff. I mean, it was already in a downswing from the top here, 30%, but especially since their earnings, guys, it's been straight down, almost 21%. We are deep into oversold conditions with a 22 RSI, and we are also coming up into the next big area of support, talking about 40 all the way down to 36. So although the valuation isn't the best for Chipotle, it's still a little bit on the rich side. The thing that I do like about this company is it's coming down hot into daily oversold conditions, and we have a very large support area, which could result in a short-term bounce. I'm not saying the stock is going to do this, but the stock might just bounce from here. And if it then rolls over, that's fine. I'm looking to play our first touch bounce into the very large support area into daily oversold conditions as a result, right? So that being said, the expected move for the week on Chipotle is 40.29. Let's go shopping on Chipotle and see exactly what we can find. So let's have a look at Chipotle right here. Chipotle coming up. And if we're looking for $40 or less in terms of the strike, if we want the 0.5% rule, half of 40 is roughly 20 cents. So you will need to see 20 cents on this bid right here. As you can see, it is not quite there yet, but it's very close. Essentially, what I'm saying is 1 or 2 little more red days could free up the $40 strike, but maybe even better. Maybe it frees up the 39.5s or the 39s. I enjoy playing this entire area. If I can find a 40, I don't mind doing that. But if I can find even better, talking about a 39, maybe even a 38, right? Because it all depends how Chipotle opens on the Monday session. If they only go down by 0.5%, maybe I'll enjoy doing the 40s or the 39.5s. If Chipotle opens up the week down 2% again, well then of course I'll be able to get better strikes talking about the 38. Provided that I can find some strikes in this overall area of roughly 40 down to 36, I'm happy playing this short-term oversold condition into a very large support area for a very good company. Now, they have been struggling with same-store sales growth, but the company has a fairly resilient business model. The consumers still enjoy going there. It's just that we know that consumer discretionary spending trades have been a bit challenging, and I'm very patient on them. I wait for daily oversold conditions. I wait to come into a big area of support, and that is exactly what we have right now. But of course, if Chipotle is not your cup of tea, feel free to skip over this play altogether. As a matter of fact, all these trades are just ideas for you guys, showing you guys how I go shopping for some opportunities. That's it for company number 3. Companies number 4 are, the reason I say companies, plural, is because I'll give you 2 of them, talking about cybersecurity plays. So we know that cybersecurity has been a bit of a pain point for the market in the most recent few weeks. Palo Alto Networks is down 20%. CrowdStrike from the highs as well. This company is down from the highs 17%. Fortinet just had their earnings as well. That company from the highs is down close to 30%. And so many others have just been having a very natural pullback. This sector ran very hard for a good majority of the year. And now a couple little catalysts later, and we are quickly finding our ways into oversold conditions, into very nice pullback areas. So the first company of cybersecurity that I'll present to you guys is going to be Palo Alto Networks, a very legendary player in the space, one of the biggest cybersecurity companies out there. They're kind of sharing the throne right now with another company, which is CrowdStrike, right? So big decline on Palo Alto Networks, coming down into support 170 all the way down to 160. And as a result as well, we have oversold conditions. So kind of like Chipotle, right? Into a nice support area, short-term oversold conditions. The only reason that they're down is because they paid a lot of money to acquire another cybersecurity cybersecurity company, and the market just sold them off for that reason. But there's nothing inherently wrong with this business at all. The fact that we're coming into some of the tariff low areas, some of the areas that we hit in January, and previously last, let's say, November and September, we have a very nice support here, plus daily oversold conditions. So I want to be playing a bit of this volatility, and I would not mind being assigned some shares of this fantastic company. So 162.17 is the expected move for the week. Let us go shopping on Palo Alto Networks to see what can we find below that, preferably maybe 160, right? So let's have a look right here. 0.5%, half of 160 is roughly 80. So you'll need to find 80 cents on the bid. We have two strikes available right now. The 162.5s, which are paying over $1, but we know 162.5 is slightly, ever so slightly above the expected move. And below us, 160, we're not getting enough premium there. So we're kind of in an in-between situation. What that means is that you'll need to have a little bit of a further push to the downside to free up the 160 strike. At a first glance, the strikes that I want for this week, depending on how much Palo Alto moves down on the Monday or Tuesday session, if you can catch it, I'll be looking for the 160 strike or maybe undercutting our support level briefly here at 157.5. We are big daily oversold conditions. The sell-off is not going to last forever before we start getting a bit of a bounce from the bulls. So as a result, for me this week, I want to be playing either the 160s or the 157.5. Just make sure you're being patient, and just make sure as well you are getting adequately compensated, meaning that you're getting at least 80 cents to make this trade worthwhile. That's cybersecurity company number one. Number two, because it's a two-part sector right here, is going to be Fortinet. So Fortinet came down. I did a big earnings presentation on them in yesterday's video, essentially saying that, yeah, pretty sure it's a big market overreaction, but we like to play those, right? So keeping in mind, this is a huge area of prior resistance. It used to be former all-time highs. We're coming down now into it as support. This is also the 200 weekly moving average. You can see that whenever Fortinet has pulled down into here, at least over the past, 7-8 years, usually the market has found a bounce. And you have Confluence. It's coming into the 200. It has great prior resistance, which is current support. And on top of that, we are still big daily oversold conditions. That is what I like to call factors of confluence. All things that lead you to believe that more likely than not, even if we struggle for a little bit, a bounce might just be just around the corner. So that being said, the expected move on Fortinet is 71.7. Let's go shopping on the options chain and see what can we find below 71.7 for this week. So pull up the options chain right here. If you're looking for the 0.5% rule, half of roughly 70 should be about 35. As you can see at the $70 strike, sadly, for some reason, Interactive Brokers is not loading the 71s. I wish I could see them. I assume they must be about 25, 30 cents, but I digress. If we just look at the $70 strike right here, you can see that on Friday, this is Friday's price action to the right or left-hand side of me, depending on what you're watching this on, right? So you can see here that on Friday, the premium was available many times in the 35-cent range. Essentially what that means is all you're looking for on Fortinet for the 70 strike to be open is a little bit of a decline on the Monday or Tuesday session. If that does happen and we pull back a little bit, I'll be looking for the following strikes, guys. 70 down to about 66, as low as we can possibly get while still getting roughly our 35 cents on the bid. If you can follow it lower into the 68 range, perfect. If all that's available is 70, I don't mind either. I would not mind being assigned at any one of these three levels because we're daily oversold. And as I said, historical EMAs and prior resistance is current support. We have a lot of odds in our favor right now that this is probably going to materialize into a local bottom. It might be a little bit bumpy during that process, but that is exactly why we sell puts under the market to lock in that juicy ROI. And the company's valuation now is a lot more manageable, even though objectively speaking, it is a bit on the expensive side. It's one of the cheapest cybersecurity companies out there. So keep that in mind. That's for Fortinet. So those are companies as part of the fourth segment of the top 5, Palo Alto and Fortinet. Hopefully you guys enjoyed those. And now stock number 5 is going to be another one that people know very well. We're going to talk about Airbnb. Airbnb, another company that had pretty good earnings, but unfortunately the market didn't react as such, right? So Airbnb after their earnings is currently down about 8%. We are also into daily oversold conditions, and we are coming into a very legendary area of support. This has been an area that supported the markets for a better part of the last 3 years, guys. And what has Airbnb been doing in the last 3 years? They've been improving their fundamentals the entire time. If we take a look here at EPS, they've been getting better in terms of EPS, in terms of the expansion profile here. Here were some one-time realized gains that they had, right? But now we can see a more consistent path in terms of EPS, but especially revenue, right? Since 2022, this company has improved revenue by a factor of 50% and will be improving revenue into the future as well. I don't see any problems with this business at all. They have a great free cash flow yield. The valuation right now at around 120 is very manageable. And we have some technical indicators that let us know, yeah, this is not a bad area to position in. So as a result, that's what I'll want to do this week. The expected move is 117.81. So once again, one last time, let's go into the options chain and see what can we possibly find below roughly 118. So if you're in the 1-teens, 120, 115, well, you'll be looking for about 55-60 cents for the 0.5% rule. Where can we find that right now? Well, as a matter of fact, you can find it at the 117 strike, which is below the expected move. However, true to my fashion, right, as I will say, if Monday or Tuesday after CPI, you are presented with another red day and Airbnb drops back to 120, 119, 118, well, then you guys know what to do, right? You wouldn't stay put at the 117, you would try to get as low as possible on this option chain. The best strike that you can find that is still paying roughly between 55 and 60 cents, that would do it for me. If you want to know my favorite strikes for this week, I'll be dynamic with it, but I would not mind 117 all the way down to 114. Of course, if Airbnb opens up red on Monday, like 3% for some which reason, then you'll have a better chance of getting the 114s, right? If it only opens red like 0.5%, then maybe you can only get the 117s. I don't mind either one of these strikes because we are into daily oversold and we are into support. And eventually I do believe that the bulls will be buying the dip down there. So that is company number 5. And with that, that wraps up our top 5 options plays for the week. Hopefully you guys are able to be inspired by some of those, find some ideas, or at least, even if you didn't like any of the plays, at least it shows you how I'm trying to pick my plays, which is arguably the more important part of this video, right? Is not just giving you guys fish, it's kind of teaching you how to fish and the things that I look out for in companies in terms of their fundamentals, but also in terms of the technical areas that I want to play them with several conditions like support, looking for oversold conditions, etc., right? So that's it for the top 5 options plays. Now we're going to jump into 10 bonus plays. And for these 10 bonus plays, I won't be giving you guys the expected moves. You guys are now professionals at doing that. You can go find them on your own. But what I will be telling you guys is where I'm enjoying playing those stocks, right? Where do I want to find short put options on those stocks, the overall areas. So we're going to break it down into 4 different categories: some growth stocks, some value stocks, some stocks that for small account holders, and also some stocks for large account holders. So let's get right into it. Okay, so part number 1, the growth stocks here. Number 1, as part of the growth stocks, is going to be SOXL. Very simple trade, guys, but you don't need to play it too aggressively. So this is based on the SOXX Semiconductor Index, and of course, it's the 3 times leverage version of that. You can see on the SOXX right here, we have a very nice prior area of resistance, a lot of choppy price action. The bulls are fully in control of this one. We are looking for a higher low. As a result, whenever I see red days on the semiconductor ETF as a whole, I want to be playing this pullback range. This pullback range is roughly, let's call it between 5 to 10% wide. As a result, SOXL, you're going to have to go 3 times that. So meaning SOXL, I want to be playing down here in the 15% range, a bit lower, right? So that being said, I enjoy writing puts on SOXL and have been doing so almost every week the past 4 weeks in the $22 down to $20 range. So that's play number 1. You don't have to play this one too aggressively. I know the premiums on SOXL can be very alluring, but just don't get seduced by premiums, guys. You can play the 22 strikes, and it does give you the 0.5% rule. You do not need to play too close. Play those at your own discretion, of course. Company number 2 is going to be Elf Beauty, another fantastic growth company that had pretty good earnings, but unfortunately the market reacted negatively to the downside because of the mention of tariffs, of course. However, this whole area, 104 down to 87, is a pretty decent one to be basing some trades off, and you don't need to play it too close. You can see here that Elf was actually up on the Friday session, and if I want to be playing $90 or better into that support, I mean, it's a long-standing support area. It stopped the market there, stop the market there. We have a ton of moving averages as well. And the growth profile of ELF is pretty good, and they are a cheap valuation. If I wanted to play ELF, I'd go down here roughly in the, sub $90 range. And you can see that for Friday, well, they're not there right now, but if we do get a bit of a dip here, we can possibly find some premiums into the $90 strike or better. So keep your eye on that if ELF Beauty is something that you do enjoy playing. Stock number 3 is going to be another growth company that you guys know very well, and it's going to be HIMS. So HIMS has had a very volatile week, coming down a lot since their earnings release. It was a bit of a dump, it was a pump, and then another dump. So that being said, we're into support right now. 52 down to 48 is the logical area of support. Stop the market there. It was resistance here, and the bulls seem to be basing some trades off of this area right now as well. You do not need to play HIMS too close. Matter of fact, you can get some extremely attractive premiums, guys, if you play this one a lot lower, right? Take a look here. ELF is just a pure volatility trade. Look how low I can get on ELF Beauty and still get 0.5%. I can go all the way down to the 41 strike for Friday. So any red day, right, 2-3% to the downside, I can get all the way down here at the $40 strike roughly, which for the Friday session would be another sell-off of roughly, let's call it 20% into the 200-day EMA and into the bottom of some of these lows back here in June when they had the NVO news headline, of course. So HIMS, I'm just playing it for the distance. Keep that in mind. And stock number 4 as part of the growth list is going to be AMD. So AMD needs no introduction as well. You guys know I talk about it very often on the channel. Extremely high growth rates in terms of revenue and EPS. The valuation around 150 is not that bad. A 1.3 PEG ratio and a relatively manageable price to sales metric. The bulls are in full control of this chart right now, but we know that they're struggling with resistance a little bit. If we see AMD pull back over the course of this week, I'll do exactly what I did last week. When we had this pullback after earnings, I was able to find the 150 short puts or better, and this is the area that I want to be tagging, right? Prior support for the markets, current support for the markets probably as well. The moving averages are there too. So in the event we get some pullbacks, I will be playing the 150 down to about 140 range, selling some puts on AMD. Would not mind being assigned this one. It's a very favorable stock right now. So those are your 4 growth plays. Hopefully you guys enjoyed those. Now, 2 value plays right now that I got to bring up. Number 1 is going to be Bank of America. Now, the value plays are not for everybody, but I know that some of you are more conservative and maybe you want some value plays instead of all the high growth names with high volatility. Bank of America is a bid for me, talking about the $44 down to $40 range. We're kind of coming into it now. Solid company. They had great earnings overall, showed the consumer was not very weak and that the company was very well capitalized in the event that you do get a little bit of a market downturn or something like that. So Bank of America, I do enjoy it a lot. 44 down to 40. I would not mind playing this one at all on a weekly recurring basis. If we find some red days into this week, similar to what we had last week, I presented it last week on the channel, and there were ample opportunities to go shopping for it last week. If it gives us another entry, I'll be doing that one as well. And value company number 2 is going to be Nike. Well underway to the recovery story right now. And on top of that, recovering a very nice area of support, right? The area that stopped the market before the massive tariff unwind. We've now largely recaptured the level, recaptured a lot of the weekly moving averages. And this area is one that came back all the way in 2018. The company right now, I mean, I wouldn't say that it's super undervalued, right? Even at the $70 range, sorry, just add about 10% to these numbers right here. I mean, the forward price earnings is not the best. The forward price to sales is not the best. The free cash flow yield is very good though. It's just overall, the company's been very weak recently, and I'm willing to give Nike a chance for the recovery story. As a result, I do not mind really playing the low $70 range for some short puts. I think it should be a fairly easy trade to get into and then also get out of if we're assigned with some covered calls. Seems to be that Nike is well underway on the recovery story right now. They acknowledge the execution problem. They changed up the CEO, they changed up the way that they're doing business, and now I do give this one the benefit of the doubt, so I'll be looking to play the low 70s. It is a value play, of course, though. Now, some plays for small accounts. Take a look at this one. SentinelOne, also a cybersecurity company, and additionally, similar to the rest of the industry here, guys, in the past couple of weeks, this one's down 23%. Now, we are as well heading into daily oversold conditions, and we also have a very nice area of support to be basing some trades off of. This is the area that stopped the market all the way back in 2023. It extends from roughly 17 down to 14. So I do not mind selling some puts. It's a very cheap company to play as well. You don't need to play it too heavy, but it also has very good volatility, meaning you can get some strikes far away from the market. And in the event that you are assigned, covered calls are very easy and very manageable to do. That's company number one. Company number two is going to be Oscar Health. Now, this one is a retail favorite right now. It is a health insurance stock, and unfortunately, it has been down with the rest of the health insurance market. But we have a very clear area of support to be basing our trades off of, right? It just kind of stands out to you on the chart. Very solid range right here, talking about a year and a half worth of support, and Oscar has some very good volatility. I mean, even though the stock has been up this week, it's about 1550 right now. If you go on the options chain and want to play that whole area, which is roughly what? 14, let's call it 14, 15, down about 12 and a half. You can get some pretty good distance on these strikes, right? The $14 strike is available, right? So the 14 is not too bad, but in the event that you see Oscar Health on a bit of a downturn and you want to participate, 14 down to $13 range is a pretty manageable one. It's a very cheap company for 100 shares. You don't need to play it too heavy and could just be one that you might want to keep on your radar if this is the type of company that you like overall. That's the two plays for the small account. Now, some plays for the big accounts out there. Number one is going to be Visa. Visa, super solid name here, guys, right? A couple things to keep note of is it's coming down into a couple moving averages, the 200-day EMA, which is also the 50-weekly EMA, which is also the monthly 12 EMA. Now, you go back in history and you tell me, whenever you buy Visa at the 12 EMA, has it always been a good proposition other than the big bear market of 2022 and COVID? Well, the answer, right, is probably yes. So we do want to be playing these pullbacks. Visa right now just is barely coming into very weak RSI, barely oversold conditions, a couple more, well, one or two more red days, and I really enjoy playing this entire level, guys. I'm not going to be playing it too far because I want to really, if I get assigned shares on Visa, I'm being assigned in a great level. It's been an area of support and consolidation for a better part of the last 6 months, so I will continue to play this stock. 330 for me, 330 or a bit less is a very manageable strike price. So that is what I'll be doing with Visa. And the other company is going to be Berkshire. So Berkshire has come up on the channel a few times. We're coming into some support levels established last August, fall of 2024, guys. A lot of support. We're between two very crucial moving averages on the monthly chart. And you just go back in time and you tell me, if you buy this one between the 12 and the 26 EMA, has it been a good proposition between the 12 and 26? Right? 2022, COVID. Other than that, every single time that you would have positioned here for the most part, in the last 10 years has been a very decent proposition. So Berkshire for me is like a 450, 445. I would not mind finding some short puts there. So if ever Berkshire has another day of decline and brings us back into oversold conditions, I know that I have a few things. I have a very wide support area. I have historical moving averages. I have daily oversold conditions. All those things contribute to confluence, which is why I do enjoy playing this one right in the lower 450s. So keep that in mind if you have a big account. And Berkshire is a company that you would not mind playing. And that wraps up all of the possible plays for this week, guys. Hopefully you enjoyed today's video. If you did, consider dropping a like. Would really appreciate it for the growth of the channel. Consider subscribing if you're new. We do these videos every single Sunday in preparation for plays of the upcoming week. And lastly, if you have any questions on the strategy, please feel free to comment down below and I'll do my best to answer them tonight. That way you guys are ready with everything that you can possibly have into the upcoming week. Last but not least, if you did want to trade the markets with a community and trade the markets with myself personally, where we specialize in this wheel strategy, you might consider joining our trading and investing community, where we focus a lot on the wheel strategy, but we also do many other strategies too. In terms of what you would get in the community, well, obviously you get access to all of my trades in real time. You can see that every single week we take many trades with the wheel. We also do other directional trades too, such as call debit spreads, lead call options, sometimes some swing trades with some shares, sometimes some lottery trades. So there's definitely something for everybody. Here, you could just watch the wheel section, right? We'll go back a few months in terms of the trades. All the green check marks are wins and all the little circles are red, obviously for the losses, right? So that's just like 2 months of data. You get access to all the various trade opportunities that I ever fire off in a given week. You also get access to our private morning live streams every morning, Monday to Friday, from about 9:30 through about noon. I trade the markets live and I also answer all your questions on your stocks, your options, and your long-term portfolios. If you're not there, they're always recorded, and you can also ask me all of your questions in our chat rooms throughout the day. You also get access to my private educational section where I share many more detailed strategies for trading options, a bit more advanced level wheel stuff as well if you're into that, technical analysis, fundamental analysis. There's a whole educational section of videos there where I really teach a lot more than I do so on YouTube. And additionally, guys, you get access to all my charts. So the watch list that I use to kind of take these options plays and monitor all the time, you can copy all of my watch lists, and you can also copy all of my charts whenever you see support resistance areas, whenever you see the fundamental analysis that I do after earnings. You literally just copy paste my entire chart layout. It takes like 10-15 seconds. All the charts become yours, all the watch lists become yours, and you are seeing exactly what I see too. It's just an added benefit for our Discord members. If any of that sounds good to you, well, the link is down below in the video description. Hopefully I see some of you guys in the community with us sometime soon. And if not, I'll see you right back here on the channel. That's it for me. Have a great rest of your Sunday and have a great week trading in the markets. Take care and peace.